Hello everybody. It is I, Lawrence, back with the financial thing, investment slash peer-to-peer lending slash thoughts about life slash whatever. Livestream. Let me move the table up a little bit. Oops, no, that's the wrong way. Hang on. The wonders of a standing desk. Hope you're doing well. It's been a while. What, 6 weeks? I think, 6 weeks since I've been here in front of you. I need to move this down just a touch. And, yeah, it's good. I guess it's good to be back. I mean, honestly, I don't know if it's good to be back. I think it's good to be back in some ways. I think it's good to be back. Definitely enjoyed the trip to the UK. It was a fun time. The weather was fantastic. I think it rained 2 days out of the whole time I was there. And I hear you're having some very hot weather, which is, I guess, nice in some ways and unfortunate in other ways, since air conditioning seems to be a thing that is not very common in the UK, which, we live in the air conditioning here in Florida, and God, without it, we would just be little fried up dried prunes. So we'd have to have it. Anyway, I digress. I hope you are having a good week too, and that, we have to try to get back into the routine of being here weekly so we can talk about what the heck is going on in the world, because crazy things are going on in the world, which affects our finances too, so. What are we going to talk about today? We have a lot to get through. Peer-to-peer stuff. I went back in the archives and the news, pulled out some interesting things that I thought were interesting. What I have noticed is, if I keep getting asked, is peer-to-peer lending actually a growing industry, at least in the UK? And when I look for news articles and interesting things to talk about, I'm finding less and less of that information around. There just isn't much. So that would lead me to believe that actually peer-to-peer lending is kind of a stagnant investing vehicle, because I don't know how many new people are being introduced to it. I just don't think there's that many new people that are coming into the space, which is unfortunate, because I think there are some big advantages to peer-to-peer lending. But anyway, we'll see. I don't know what your thoughts are. Do you think it's a growing space? I'm not so sure. I think it's a stagnant space at the moment. I think a lack of education really exists out there for to introduce what we know and some of us love to introduce to others. Until it is introduced to new people through education, it probably won't expand that much. So anyway, we're going to talk about that. We're going to talk about some two interesting letters that I got in the mailbag over the last few weeks, and a little bit of cryptocurrency, Bitcoin stuff, and then we'll take a look at the Trading 212 portfolio, since it's been a few weeks since I showed it to you, and a couple of interesting things that Trading 212 has added to their portfolio page, which I really like, and while not sure how helpful they are, they're very entertaining at the least. So yes, anyway, welcome to everybody. Quick hi to Colin Perry in the Sunny Peak District, Peter Vince, of course, Mr. Trusty Peter in Leatherhead, welcome back. Thank you for that, Peter. Yes, I had a very good visit to sunny England. I actually took a trip to sunny Skegness, if you believe that, and brought me back to the childhood. Yeah, hit the thumbs up for Skegness if you can. Skegness, wow, what a place. Actually it's quite a nice place now. Paul Bagworth from a very hot Kenilworth. How hot is it in England tonight? I don't know, I haven't checked. Stephen Hale from Nottingham. Doesn't it feel like everything is just getting hotter and hotter and hotter? Feels like that here right now. It's 30 degrees and it feels roasting outside. It's not even July yet. David Allard is here. Nice to see you, Dave Allard, too. So let's just get into it, right? No sense in standing on ceremony. We'll get into it. Leave comments if you have any interesting things that you may know about that I may not, because you guys do know some things. Yeah, you do. Okay, so conflicting things about this right here. Funding secure administration likely to be extended further, and I'm getting news that they are hoping to have this wrapped up by the end of 2025. While I personally believe that will not happen, but this news story was printed on May 28th of 2025, saying the Funding Secures Administration is likely to be extended again, adding even more time to the collapsed lenders' drawn-out insolvency proceedings. The peer-to-peer pawnbroker and property lender went into administration. Get this, October 2015. So we are now 6 years coming up to when it went into administration. I've always said I think that these things take between 5 to 10 years to wrap up, depending on how many loans there are, how many complications there are. I don't think this is going to be wrapped up by the end of the year, but we'll see. The administration was originally extended 2020 for 3 years with an end date set for October 2023. I don't even know how you could expect to have gotten that administration loan book wrapped up in 3 years. That just seems impossible. Then it was extended again to October 2025. But according to the latest administration report filed at Companies House, CG & Co., the administrator, said it's likely a further extension will be required based on present information. The report published showed gross loan realizations between 23rd of October 2024 and 22nd of April 2025 amounted to £947,792,000. They have realized gross loan amounts of £53.6 million, and it says there are 2 remaining viable defaulted loans with outstanding capital of $892,000 outstanding. So, well, I guess if there is only 2 remaining loans with outstanding capital, yeah, they could get it done by the end of the year. I just find that hard to believe. Considerably lower, that 2 loan amount, than a report published last October, which showed 52 remaining defaulted loans over 10 million. So have they cleaned up that many loans that quickly? That's interesting. Since it went into administration, Funding Secure has racked up administration fees just south of £1 million plus VAT. Investor withdrawals now total £34.25 million to date. So at least money has been paid back. I know I've gotten some money back. Certainly not as a whole. I've not been made whole, of course, on the loans, which I didn't expect. But honestly, if I'm able to get back 20-30% in these failed companies, I'm happy with that. So Funding Secure administrator CG & Co. has done that. Let's move on. Folk to folk, there he is, Ray Warren, with his, is that an Apple? No, that's a Windows laptop. Yeah, Ray Warren right there. Folk to folk sees a surge in cash ISA transfers as investors seek monthly income. Folk to folk, the UK's largest peer-to-peer lending platform, has reported a surge in transfers from low-yielding cash ISAs into its innovative finance ISA. During 2024-2025 tax year, cash ISAs accounted for over 73% of all ISA transfers to the platform, an increase of the previous year, with the remainder coming from stocks and shares ISAs. This increase comes amid a wider discussion in public around cash ISA reform and the growing visibility of alternatives like IFISAs, the tax wrapper around peer-to-peer lending investments. So Folk to Folk says, in a year where investor caution has been high and inflation has eaten away at savings, we've seen more people making an active choice to move away from cash ISAs, seeking opportunities that can outpace inflation and deliver income. IFISA offers fixed monthly interest backed by property. It's a clear alternative to leaving cash sitting dormant, and it funnels private capital directly into growing British businesses, which is something the government want to see. Now, Folk to Folk's IFISA has attracted nearly £77 million of investment in the first month of 2025 tax year. Folk to Folk recorded its strongest monthly level of ISA inflows of more than £4 million. Now, people out there have a dilemma at the moment, which inflation continues to be sticky. I've seen the reports about inflation coming down, but I see it in the US not coming down. I think it's going to go back up in the UK. And interest rates, I just don't see them coming back up. Now, I think we had the US fixing their interest rates, not moving them on the last few days. I haven't looked at the inflation numbers recently because I've been on holiday and I said I'm not going to look at any of this stuff. But I'm presuming it hasn't. You know, let's take a look right now. CPI USA numbers. I'm presuming it hasn't gone down. Let's see here. CPI for all items rises 0.1% in May. So yes, it's not going up. Not terrible, 2.8%. But I really don't see it. Oh, look at that, energy gone down minus 3.5%, but we may see that change again because of what's going on over in the Middle East. But yeah, people have a dilemma. They face a dilemma. What the hell do you do with your money to create yield? How do you get money? How do you get dividends? How do you get income? If you're retired, how do you get fixed income? And one of those options is peer-to-peer. People understand that interest rates, while they have actually dropped in the UK, now I'm getting all kinds of notifications from the bank saying, we've cut your interest rate to less than 4%. No, I think I got one. Where is it? Your interest rate is going down. Let's see here. This was a notification I got from Marcus Bank on May the 14th that it's being cut from 3.79% down to 3.5%. I think this is going to probably continue. And look, if you're getting 3.5% in the bank, you're just really strangling yourself financially. Inflation, I believe, is certainly over that amount. So your money is just losing value. So I can understand why people are turning to places like Folk to Folk to try to get a decent yield if they can stomach the risk. So yeah, it's pretty relevant, I would say. Let's continue on. Some more news pieces. Easy Money hits $500 million in property-backed lending. That's pretty amazing. This was June 10th. They've surpassed £500 million in lending, and they've achieved this while maintaining a zero capital loss record for investors. To date, Easy Money investors have earned more than $50 million in interest payments, with monthly payouts averaging approximately £1.5 million. The platform expects to have paid more than $60 million in interest by the end of 2025, and they continue to grow their loan book, says Jason Ferrando, CEO. We know our market extremely well, and we have a proven track record of performance over almost a decade. We're proud to say no investor has ever lost a penny of their capital by investing with us. So let's see what Easy Money rates are. This is another place you can go to get yield. Let's see. This is not terrible. 5.4 to 5.7% target rate for a £100 minimum investment. So if you are looking for yield, you can put in 20 grand plus. You can get 6.3 to 6.7%. I think most people would be probably comfortable in those two ranges. Putting in 100K, I don't know too many people that have the stomach for that into one platform unless you're a very high net worth person, which I guess is why it's called high net worth. So those are two places that you can go to get yield. I always have to ask myself, though, is it worth, if you're in this premium range of 5.4 to 5.7, can we do better than that? Can we do better than the spread that's 3.75% in savings account and this low spread 5.4 to 5.7? I think there are places you can do better than that, but again, diversification is key, because if you go to other places that does offer more and they fail to deliver, then it kind of kills you. So anyway, good for Easy Money for getting to that pretty big milestone of £500 million lent over in 10 years. That means that they've got some history behind them now. 10 years of history of not losing people's money is really, really good. And I think as these companies continue to age and provide a good history of non-loss, then more people maybe will enter into the space of peer-to-peer and looking at it as a viable investment vehicle. Let's see what else. Shojin completes the first Sharia Compliant real estate investment. The firm's investment into a 250-unit residential development in Salford, up in near Manchester, was split between its traditional bond investment structure of $2 million funded and a Sharia compliant commodity murabaha structure, $2.2 million, which adheres to Islamic financial principles. Now, I don't know much about Sharia compliant investments, but I guess it's a good thing. I don't know. I can really comment. I think most people care about, am I going to make money on this product and this loan, or am I going to not? So, but yes, there are some religious people that care about things that are compliant and ethical. So I think that's a good thing. The firm is now exploring collaboration opportunities with other platforms to make UK real estate projects accessible to clients worldwide who are seeking Sharia compliant investment opportunities. The Islamic finance market is expected to reach $6.67 trillion globally by 2030. Bondora has dropped 37% in loan originations in April 2025. The European peer-to-peer lending marketplace issued 19.1 million euros of loans, which is about 60 million pounds, down 37.6% from March, which was 30.7 million euros. It said the dip came as it optimized its spending marketing budget during the part of the month, which led to fewer net borrowers overall, but added the volumes picked back up towards the end of April. Now, another news story that comes along with that, Bondora Group defends a sharp fall in net profits. They released that they had a net profit in 2024 of 1.2 million euros, which, considering how many loans they write, is actually pretty small. And that had dropped from 3.4 million euros in 2023. In a fresh statement, they said Bondora said the decline in profit and the increase in doubtful receivables were both primarily due to a one-off accounting adjustment related to changes to its fee receivable provision model. That's complete French to me. I have no idea what that means. This is a problem with companies when they release earnings, and it happens too with companies that are public. They release earnings and nobody really understands why the earnings are the way they are, unless you're some kind of an accountant or very knowledgeable in finance and you care to really deep dive into these companies and why they do what they do. And when they put out a statement saying adjustment related to changes in its fee receivable provision model, most people are not going to know what that means, myself included. I'd have to Google it, which I'm not going to do because I don't really care about Bondora's profits. We'll see what happens in 2025, but that is a big dip in profits. If this number does go back up for 2025, then what they say is true. I don't know what Bondora's failure of loan situation is like. Could be that more people are running into issues with the loans that they are getting on the aggregation of that Bondora platform. We'll see. Let's look at this assets capital statement. Now, this was from April 2025. We didn't go, can't remember if I went through this or not, but I'm not going to go through the whole thing. They did say that they've had 194 loans repaid with 95.3 million pounds being repaid. There was one number in here that really made me feel a little sick. There you go. 72 of the loans marked as default with a value of 39 million pounds. Just a bunch of problems. 39 loans with outstanding loan capital of £14.3 million is listed on the irrecoverable loan tab on the lender dashboard that they have tried to recover and they don't feel like they're going to get any money back. Now, imagine that. 39 loans out of, we can see here the total number of loans, 143. So we're talking about close to 30% of loans that just went bad. And to me, that does not bode well for assets capital. It means that they just gave a bunch of loans to companies that probably had no intention of ever being able to pay those back. Maybe they did. I don't know. I guess I shouldn't say that. But it seems like the background underwriting work that was done by Assets Capital was not a good one. 39 loans, that's about 27%, I think, of their entire loan book. Of course, SME lending, I've always said this to you, I don't really like it that much. It's extremely difficult to assess the risks on a business. Business is cash flow. Customer bases can change drastically month to month depending on what's going on in the economy. So lending money to SMEs is really, really hard. You got to be really good at it. And that loan, irrecoverable loan amount just tells me that Assets Capital wasn't that good at what they did. So there you go. 8.5 million of outstanding loan capitals where lender loan units have been replaced by provision fund, blah, blah, blah. Yeah, so not really a good result. Check this out. FCA released a statement. This is about complaints of how they handled the funding secure situation. A lot of people complained about it. They also asked for more financial compensation. FCA released a statement on the 3rd of June saying, we're writing to following your complaint. I don't know who your is. Maybe it's a group of people about the FCA's actions or inactions in relation to Funding Secure Limited. We're sorry you've suffered financial loss. Have a great deal of sympathy for your situation. Losing a sum of money can be deeply upsetting. Yes. We're sorry for the length of time it's taken to respond to the complaint. It was important we allowed regulatory action to conclude, which meant our investigation was deferred between 2021 and 2023, blah, blah, blah. We've received several complaints about the actions and the inactions of the FCA in relation to Funding Secure, and they write about their decision to these complaints. So we have upheld our complaint allegation 1, which is allegation 1, though, for failures. There were failures by the FCA regarding the authorization of Funding Secure. And then allegation 2, there were failures by the FCA regarding the supervision of Funding Secure. So they've said, yes, we have upheld complaint against allegation 1. So yes, they say you're correct. We have failed regarding the authorization. But against allegation 2, we have not upheld the complaint against allegation 2. We have found the FCA should have done more when it was assessing Funding Secure's platform. Specifically, the FCA should have done more to understand that Funding Secure's business model had changed and that it had begun to offer property loan development loans. The FCA should have also ensured Funding Secure Limited had an approved person responsible for client money at the time it was authorized in March 2007. Regarding complaint 2, once Funding Secure Limited, I'm just going to say FSL. Once FSL was authorized, there was considerable engagement between the FCA and FSL. We have assessed that engagement and concluded that overall the FCA's actions regarding FSL were reasonable and proportionate. Complainants have asked the FCA to compensate them for their financial losses. We have concluded that this is not appropriate. Denied as the losses suffered by complainants was caused by the failures of FSL and not by the FCA. We'd like to apologize for our actions relating to complaint allegation 1, which fall below our usual standards. We know this is disappointing. We will explain our decisions and rationale below. I'm not going to go through all that. It's 11 pages. If you want to read it, you can go to the FCA's website. Just Google it. Sorry, I might not have shared the screen there, but just go ahead and Google it. It's there, fca.org.uk. I wonder if there's going to be any kind of legal action towards the FCA regarding this, because while they did give compensation for a collateral situation, even though it was a pittance compared to what some of the amounts of money people lost, they, however, did give compensation regarding regulation and lack of regulation, blah, blah, blah. So I wonder if, maybe there is going to be some legal action to try to get some compensation because of, number one, that they agreed with complaint number allegation 1, where there were failures by the FCA regarding the authorization of FSL. I think that's an important fact, because that is the primary job of the FCA, is to make sure that authorizations are upheld and done correctly. They seem to have failed in that department, which would lead me to believe they should probably be compensating people for that failure. The number 2 part, I don't know, that's questionable. There were failures by the FCA regarding the supervision of FSL. I don't know. That's a pretty complicated topic. I would say if I were looking at it from an outside perspective, yes, allegation 2 would also be a failure in my book, but I guess the FCA gets to decide whether they're right or wrong of their own faults and mistakes. Which, is that fair? Maybe not. Maybe there needs to be an unbiased third-party investigation into the FCA's actions, because, I don't know, to me that's a little bit weird that you would get to decide whether you were right or wrong. It'd be like you going in front of a court and getting to decide if you're guilty or not guilty, and then deciding on your sentence. There's usually a judge who does that, and I think that there should be some third-party, disconnected, unbiased party to decide whether the FCA should provide compensation or not. Just my view. Anyway, let's move on. Let's go to the next thing right here. This is going to be disappointing for some, but Quantuma, who is the administrator for another failed peer-to-peer lending company named AbleRate, has now said regarding a loan, JR Taverns in Cardiff, the joint administrator received some queries regarding their decision to write off this loan and crystallizes the loss to investors. So this loan has been completely written off, according to Quantuma. The money advanced to JR Taverns Cardiff was in fact paid directly to a contractor who was employed by the borrower to refurbish the pub from which it traded. Payments were advanced only upon receipt of certificates from a quantity surveyor, which all occurred prior to the pandemic. Once the pandemic hit, the pub was forced to close and never reopened. Hence, no repayments were made by the borrower. The pub was owned by Starter Mode. Although JR Taverns owned 100% of the shares in Starter Mode, it did not directly own the pub. Starter Mode was placed into administration, and the administrators sold the pub for the benefit of its creditors. Starter Mode was insolvent, and there was no return for its shareholders, thus deeming the investment shares worthless. Knowing where the borrower's money went and that the borrower has no known assets, it was not considered commercially viable to pursue the borrower for the outside loan. Yours faithfully, Neil Allen. So the borrower was the one, the contractor who got paid the money, or at least in advance. I don't know how much that money was that was paid. Maybe one of you guys does. I hope they didn't advance a lot of money, but my gut feeling tells me they probably gave them too much. That contractor is not going to pay that money back, so that loan is now DOA. Is that the right word? Dead on arrival? No, dead on not arriving. So that loan is done, so unfortunately if you had money in that JR Taverns loan, you are not going to get your money back, unfortunately. I'm really sorry about that. That sucks. Should I do the funeral sound effect? I don't know. I don't have it anymore. Never mind. Yeah, that sucks. Very disappointing news that came out on the 17th. Okay, let's go to the mailbag. Maybe there'll be a little bit more uplifting information, maybe. I don't know. We'll see. Hello, Lawrence. Can you see that? Okay, let me just adjust my screen just a tad. Here we go. There we go. Hello, Lawrence. Just wondered what you think about LendInvest. I was thinking about throwing some money into their loans. How has your investment been doing? Cheers, Christoph Potter. Christoph Potter, thanks for the message. I haven't logged in a bit, so let me log in. I'll show you how my account is doing. You can see for yourself. Maybe you'll watch this back. LendInvest is okay. It's not, I don't have a ton of money in there. You can see here, I'll show you my account. For yourself, you can see total investment is £733. Average rate 5.92%. So, it's okay. I mean, you're not going to get rich off of LendInvest, but it's a place to diversify, throw a bit of money into. It's been really steady. I've had this for years and years. I've originally put in £500, so you can see it's grown to 733. You just sit on your hands and do nothing. The one thing that does trouble me about LendInvest is this right here. 21 loans in schedule. 4 in arrears, 2 out of term and breach, and 3 in enforcement. So we got 7, 8, 9. That is, we took it 40%, 45% loans struggling, 42%. That's not great, right? I don't want to see 21. Okay, maybe I'm getting my numbers wrong. So let's do that math again. 21 on schedule plus 9, so that would be 30. So we've got 6 out of 30. So 20% of loans not doing well, but LendInvest seems to get a good handle on these loans that are struggling. So, the interesting thing is, though, if you look at my interest that I'm getting paid on the loans that I'm invested in, they're quite high. 7.5%, 8.25%, 8.75%. But yet, 8%, yet my overall is only, why don't you go show me the summary? Here we go, 5.92%. So I don't know why that is. I'm not really sure. I don't know if that's because of defaulted loans. What is going on with that? Now, having said that, I did adjust my auto invest criteria to bump up some of these numbers to get higher interest rate loans. So, I think I did that about maybe a year ago. So maybe that's why this rate is lower. But in answer to your question, it's been okay. I wouldn't sink too much money into a 5.92. But if you're starting out now and you can get into loans that are 7%, 8%, take a bit more of a risk, I think it's okay. So if I was coming in new now, I wouldn't mind it. It wouldn't be terrible. But how is mine done? It's done okay. It's done okay. Average. Not really beating inflation by that much, but it's okay. Next question. Thank you for that question, by the way. Hey, Lawrence. Hope you had a nice holiday. Question. I did. It was so nice to go back to England. I'm going to try to go more. It was great. Thank you for asking. Quick question. I spoke with my friend who works in finance. He said since the USA seems to be in turmoil, the Footsie 100 would be a place to invest. Short term or long term? What do you think about this? Thanks for any insight, Trevor in Aldershot. Thank you, Trevor. There was a story about this in the Alternative Credit Investor. This says Primera benefits from U.S. policy and uncertainty as investors flock to Europe. And it was talking about how investors are reassessing their exposure to the U.S. amid tariff uncertainty, which has benefited Primera, some kind of investment company. In a nutshell, they're saying that people are starting to lose faith in the U.S. as a place to invest. And I don't want to talk about the whole of Europe because I don't personally invest in Europe. I'll talk about what this question asks, which is the Footsie 100. And I always go back to this chart. If we look at the Footsie 100, it's been doing 7.57% year to date, 7.33%. Look at those numbers, right? 7.33% for 1 year. Not bad. Definitely below the S&P 500, but I always go back to this chart because I think this is an important chart. So if you look at, let me see. This is the S&P 500. You see that jagged line at the top? This is the S&P 500. And if I go to, where is the 1 year? I'm gonna hit the 1 year here. This is what most people don't really understand about these charts long term. Now, 1 year it looks better to have been in the Footsie 100 than the SPY and the S&P 500. But what happens is the Footsie tends to mirror the S&P 500 for the most part. Not always. I mean, it's not 100% accurate, but you can see here we have drops in the S&P 500. The Footsie drops, and if we zoom out, I don't think a 1 year chart is a really good thing to look at. But if we start zooming out to 5 years, we can see here S&P 500 plus 93%, Footsie 100 plus 39.72. But you can still see those mirrors in those drops. Look right here. Drops the S&P, drops the Footsie, drops the S&P right here, drops the Footsie. Same at this big drop here. That's when we had that big dip, drops the Footsie. And we go back to the main chart and we really zoom out to the 1980s. We can see how badly the Footsie 100 has performed compared to the S&P 500. And yes, of course, there is uncertainty in the US right now. But what I will say, people are not dropping usage of their iPhones. People are not stopping searching on Google. People are not stopping watching TV on Netflix. All of these UK companies that make up the majority of the stock market, the heaviest weights of the stock market in the US, the Google, the Apples, the Microsoft, people are not going to stop using these products. And what that's going to mean is these companies are going to continue to grow and to profit, hopefully. People are still going to buy cars globally from the US. And just because America's going through some political uncertainty and some turmoil, which, by the way, will likely end in 3.5 years when the Orange Man, who exits the White House, that's likely going to hopefully be followed by somebody who's a little bit saner. But people will still use those American companies and those products that these American companies provide and that we use all over the world. I can't think of too many British, tech companies that I use. Maybe Trading 212. I don't even know if that's a British company. But I'm still using Google. I'm still using Apple. Still using all these American products. So that would be why I would say I wouldn't give up on the U.S. as a investing through the companies that make up the S&P 500. If we go to our trusty Vanguard U.S. equity index, we're going to see that this is just made up of some huge companies. Look at the portfolio data, like 3,500 stocks. Look at here, the top products, Microsoft and NVIDIA. NVIDIA is still going to make AI chips, which you are going to use when you use ChatGPT. Amazon, people use Amazon all over the world. Alphabet, Google, Tesla, Berkshire Hathaway. I mean, it just keeps on going and going. JP Morgan, Visa. Are you going to stop using Visa? Are you going to stop using MasterCard? Are you going to stop going to Costco? Even people in the UK use Costco. Are you going to stop using Johnson & Johnson's products? No, you're not, likely. generally. Broadly speaking, you're not. So these companies will still continue to do well and profit. Hey, if you want to have exposure to the Footsie 100, go for it. Absolutely. Why not, if that's what you feel comfortable doing? But personally, I feel okay continuing with heavy U.S. company market exposure. And just because the Footsie 100 is going to mirror what the U.S. stock market does anyways, even if UK companies are doing well, long-term, S&P 500, Footsie 100 mirrors. So that's my answer to you. I would personally stick to what I've always invested in, but if it makes you comfortable, you want some exposure to the Footsie 100, go for it. Just know it has grossly underperformed for a very, 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 very long period of time. What I think is more sensible is to probably choose a global tracker that incorporates the Footsie 100 and other countries in the world and the US. Get that full exposure. Speaking of trading 212, you want to see the balance. You want to see where we are. You want to see what's going on in the portfolio. Here you go, 29,328 pounds, hovering. We're not quite at our high of 30,569, but we're there. We're almost there. We're almost 100% deployed. You can see here NVIDIA has rebounded pretty well. So MicroStrategy continues to sort of bounce around. I expect they will have a great earnings report coming up, and this stock is going to do well. Not financial advice, but we're up about 5% at the moment as Bitcoin continues to really hold its ground. The S&P 500 basically break even. NVIDIA up 43%, Amazon up 12.8%, Tesla down 7%. Mr. Elon, you are a very, very naughty man. So the portfolio is doing okay. One thing I wanted to show you here in this new feature I was talking about, some stocks now have a AI little analysis that you can listen to, and I'll just play a little bit of it because I find it super cool. Hopefully this plays. Let me do this.
Vanguard S&P 500 ASC has experienced a steady climb over the past week, with prices rising by a few percent and maintaining levels near recent highs. Technical indicators such as the moving average and momentum measures are...
Anyway, you get the idea. Some stocks don't have it. MicroStrategy does not, for example. Vanguard, NVIDIA, Amazon, Tesla, the big stocks do. So if you want to go and get an analysis from AI and see how your stocks are doing in Trading 212, you can. I don't know. Let's see if it has it for the British favorites. Let's go to, what should we look at? BP. I would imagine it would. Yep, there you go. So you can see right here. You can read it too if you want. I think it's cool. It's a cool addition. So yeah, but the portfolio is doing okay. As long as the market starts to hold up, and it's completely disconnected to reality, but it's still going forward. We missed a big opportunity. If you wanted one to get back in this dip down here of 73 pounds, you could have gotten the Vanguard S&P 500 ETF for, and now that is back to 83. So more than 10%. A couple of little pieces of Bitcoin news, significant. Cantor Fitzgerald plans $3 billion Bitcoin venture with SoftBank, Tether, and Bitfinex. Surprised to hear about that. Cantor Fitzgerald, pretty big regular finance company, is going to collaborate with those three companies to establish a new entity named 21 Capital, which aims to create a publicly listed alternative to existing Bitcoin investment strategies. What they're going to do is they're going to buy $3 billion of Bitcoin and hold it as a treasury, which you're seeing other companies. Obviously, MicroStrategy, Michael Saylor was the pioneer of that. He currently has $61 billion now of Bitcoin and continues to purchase more. We're seeing other companies now starting to do that. MetaPlanet in Japan. Now this Cantor Fitzgerald collaboration. And very interesting as Bitcoin still continues to perform, I would say, well, 104,000. Let me show you right here. It's a little hard to see, but 104,446, despite all the turmoil that's going on in the financial market. So continuing just to, I wouldn't say stabilize, but become a somewhat of a stable product. We'll see. We'll see what happens if the market crashes. Will Bitcoin crash too? Likely. But I don't think you're going to see these 30% drops anymore. I think you're more, 5, 6, 7% drops are reasonable now with Bitcoin. So let's see what else. We've got that. We've also got the small state of New Hampshire just became the first state to establish a crypto reserve. The new law allows the state of New Hampshire treasurer to purchase digital assets with a market cap over $500 billion US dollars. They're going to invest as much as 5% of New Hampshire's public funds into precious metals and digital assets with a market cap of over $500 billion. Digital assets will be held by the state treasurer using a secure custody solution. First one in the nation. I think that you will see more. How much cryptocurrency they hold in their treasury remains to be seen. Let's see what else. Is that it? Are we done? I think we're done. Yeah, that's what I got for you this week. It's about to storm here. Here, let me show you the outside. Very ominous dark cloud. This is what we get in Florida during the summertime, by the way. If you're ever thinking about visiting Florida, Orlando, I don't recommend coming in the summer. April is by far, I think, the best time of year. You get that cool, but not too cold weather. This is what we get in the summertime, storms and potential hurricanes. So if you hear lightning in the background, that's what that is. Hey, if you can do me a favor, if you have enjoyed this stream, would you hit the thumbs up for me? Small favor to ask. Because it gives me validation. It makes me feel like I've done a good job, if for nothing else. YouTube doesn't pay me for a thumbs up. So let's see. I'll just read through your quick comments, and we're going to get out of here. Hello, Annabelle Nyron. 30 degrees in Spain too. Yes, Chimpo Naughty Darren. I am back. Thank you very much. Only the first of many happy holidays this summer. I don't know. When you have a dog, it's quite hard to take a lot of holidays, but yes. Reminder, Chimpo Naughty. Yes, I did look at your poll. Chimpo Naughty has a poll up on the peer-to-peer lending independent forum. So go check it out. I'm sure you can find it by just, if he wants to put the link in the chat, you're more than welcome to. He's got a vote up there to have a place for media, I think, and review, a review space. But last time I looked, I didn't know if people were really going to get behind you with that one. I think it's a great idea, but some of those people on the forum can be a little salty. UK government announced a housing bank. My understanding, supply cheap money to housing developers. That's cool. That's really good. Good news. Mike Powell is here. Hi. Nice to see you. Increasingly worried I won't get my money back from Assets Capital. Yeah, me too. Sucks. See what happens. FCS is statutorily immune from legal action. Well, that sucks too. I did not know that. Thank you for explaining. That's what the Complaints Commission is for. That's the next step. Is there a step after that? Is that it now? Is it finished? Is that it? Are we over? Don't think links in chat are allowed. Put up on screen. I don't know. Honestly, I don't know where your poll is. Let me see if I can find it. I'll put it up there for you. Hold on. Let me see if I can find it. I'm going to do you a favor today, Darren. Mr. Chimpo Naughty. Because I'm feeling generous. Where is it? Darren needs your support. Here it is. I will put it up on the screen. It's right there. Search for his username, ChimpoNaut, N-A-U-T, and you'll find the poll. Right now we have 9 votes against and 6 votes in favor. Let me log in. I'll log in. I'll give you a vote. I'll give you a vote in favor for that. I get lazy sometimes and forget to do these things. Can I vote? Am I allowed to vote? Did I vote? I might have voted already. I think I voted on this already. So anyway, is it still? Oh, here we go. In favor. Click. You got to click on the left in this check mark. This tick box. It's kind of hard to see. So right now, 7 votes in favor, 9 against. We need to get some more in favor votes. And the topic is, could we or should we have a forum subsection for peer-to-peer media news reviews websites? I would find it useful to have a specific forum area for peer-to-peer media websites. I don't think there is that many websites out there, by the way. But anyway, we'll see. Go there. I don't know if I can post. Maybe I can post it. Let me see if I can post the link for you. Just help you out. There you go. There's the link right there. If you want to go check it out, go check that out. Support Mr. Chimpo Naughty as he fights for the rights of the peer-to-peer lending media. Thank you for that. Anyway, listen, thank you very much for being here. I'm going to get out of here. And I will see you next Thursday. If you like the content, please subscribe. Consider becoming a Patreon member so I can buy dog food for Holly. She is down there. You can't see her. Shall I just show you? There she is right there. Snoozing away. But yeah, consider becoming a Patreon. Subscribe. Tell your friends and family about the stream. Let's educate everybody about investing in peer-to-peer lending. I'll see you next time. That is absolutely all I got. Take care. Bye.